Preparing for a transfer agency reconciliations, cash, units, broker reconciliation interview. You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is transfer agency reconciliation, and why is it important? Transfer agency reconciliation is the control that proves the investor register, fund accounting records, bank cash, and broker positions agree. I would explain it as 3 linked checks: cash received or paid, units issued or canceled, and broker omnibus balances. If breaks are not cleared, investors can receive wrong holdings, NAV dealing can be misstated, and regulatory reporting can be unreliable. It is a daily operational control, not just a month-end task. While answering, focus on the investor register, cash movements, unit balances, broker records, NAV integrity, investor protection, and why reconciliation is a daily control rather than only a month-end exercise. Question 2. Walk me through a daily cash reconciliation in a transfer agency team. I would start by taking the bank statement and matching each movement to expected subscription, redemption, fee, dividend, or transfer activity in the TA system. Subscriptions should have cleared cash before units are issued if the fund requires cleared funds. Redemptions should match approved payment runs. Any unmatched receipt, short payment, duplicate payment, bank charge, or timing item is logged, aged, investigated, and escalated. The final reconciliation should be reviewed with supporting evidence. Make sure to cover bank statement matching, subscription and redemption cash, expected versus actual movements, settlement dates, unidentified receipts, overdrafts, aged breaks, escalation, and evidence retained for audit. Question 3. How do you perform a unit or share reconciliation for a mutual fund? A unit reconciliation proves the movement in shareholder units from one valuation point to the next. I would begin with opening units, add subscriptions, switches in, transfers in, and reinvestments, then deduct redemptions, switches out, transfers out, and cancellations. The closing units in the TA register should match the fund accountant's share capital record by fund and share class. If they do not match, I would isolate the trade date, class, transaction type, and source system causing the break. In your answer, talk about opening units, subscriptions, redemptions, switches, transfers, reinvestments, cancellations, ending register balance, fund accounting share capital, share classes, and tolerance checks. Question 4. What is a broker or omnibus reconciliation in transfer agency? A broker reconciliation compares the aggregate position held on the TA register for a broker or nominee account against the broker's own client level or omnibus record. The TA may only see one total position, while the broker maintains underlying investor allocations. I would reconcile units by fund, share class, account, and date. Breaks typically come from missed trades, late cancellations, settlement timing, incorrect share class napping, or broker feed issues. Clear communication with the distributor is critical. Be sure to mention nominee or omnibus accounts, broker subledgers, aggregate TA register positions, daily feeds, position breaks, trade breaks, investor-level visibility limitations, and communication with distributors. Question 5. If you find a cash break, how would you investigate it? I would first classify the cash break: unmatched receipt, unmatched payment, amount difference, timing item, or duplicate. Then I would review the bank narrative, investor reference, contract note, TA transaction, payment file, and settlement date. For example, a subscription may be booked for $100,000, but only $99,985 arrives because bank charges were deducted. I would document the reason, correct the record if needed, and escalate aged or high-value items under the agreed procedure. While answering, focus on structured investigation. Identify the break type, check bank narrative, investor reference, trade records, payment files, cutoff timing, duplicate entries, FX, charges, and escalation routes. Question 6. How do dealing cutoffs and settlement cycles affect TA reconciliations? Cutoffs determine which trades are included in a dealing day and which NAV price applies. Reconciliation breaks often arise because the register is updated on trade date, while cash settles later. A redemption may reduce units today but pay cash on T+3, creating a valid timing difference. The key is to separate expected timing items from true errors. Strong cutoff controls also prevent late trades from receiving an unfair NAV, which protects existing and incoming investors. Make sure to cover trade date versus settlement date, valuation point, forward pricing, late trades, cleared funds rules, pending deals, timing differences, and why cutoff discipline protects investors. Question 7. How can a TA reconciliation issue impact NAV or fund accounting? TA reconciliation issues can directly affect NAV because fund accounting relies on accurate units in issue and cash balances. If subscriptions are booked in TA but cash is not received, the fund's cash and shares in issue may be overstated. If redemptions are missed, units remain too high, diluting NAV per share. Even small errors can create investor fairness issues. That is why TA, fund accounting, and custody teams must align before NAV sign-off. In your answer, connect TA records to fund accounting share capital, cash balances, subscriptions, redemptions, dilution, accruals, NAV per share, and potential investor compensation. Question 8. What common breaks arise from subscriptions and redemptions? Subscriptions commonly create breaks when cash is late, the reference is unclear, the investor pays the wrong amount, or the trade is booked to the wrong share class. Redemptions create breaks when payment files fail, bank details are incorrect, fees are withheld, or a cancellation is processed in one system but not another. I would always tie the contract note, cash movement, register update, and approval trail together. That avoids treating an operational issue as a genuine investor position. Be sure to mention late or missing cash, incorrect investor references, partial settlements, rejected payments, duplicate trades, canceled deals, wrong share class, bank charges, and redemption payment mismatches. Question 9. How would you manage aged reconciliation items? Aged items need active ownership, not just reporting. I would categorize them by age, value, fund, counterparty, and risk. A one-day timing item is different from a 45-day unidentified receipt. For older breaks, I would assign an owner, document actions taken, chase banks or brokers, and escalate to management if thresholds are breached. The goal is both resolution and root cause prevention, because recurring aged breaks signal control weakness. While answering, focus on aging buckets, ownership, root cause analysis, risk rating, materiality, escalation, client reporting, write-off governance, audit trail, and preventing repeat breaks. Question 10. What controls should exist around TA reconciliations? Good TA reconciliation controls include daily preparation, independent review, clear tolerances, exception aging, and documented escalation. The person preparing the reconciliation should not be the only person approving adjustments. System access should prevent unauthorized changes to investor holdings or bank details. Every break needs evidence, status, owner, and resolution date. I would also expect management review of aged items and recurring themes, because reconciliations are only effective if exceptions are challenged. Make sure to cover maker-checker review, daily reconciliation frequency, tolerance thresholds, exception logs, segregation of duties, evidence retention, independent review, access controls, escalation, and audit readiness. Question 11. How do distributions or dividend reinvestments affect cash and unit reconciliations? Distributions affect both cash and units depending on investor election. If an investor takes cash, the reconciliation should show a payable and bank payment. If the investor reinvests, cash may not leave the fund, but additional units are issued at the reinvestment price. Breaks can come from rounding, withholding tax, wrong election flags, or incorrect record date holdings. I would reconcile the distribution file to the register, bank movements, and fund accounting records by share class. In your answer, talk about income distributions, cash payments, reinvested units, ex-date, record date, pay date, tax withholding, rounding, share class differences, and investor elections. Question 12. A broker says their position is 10,000 units higher than the TA register. What would you do? I would not adjust the register immediately. First, I would agree the opening position, then compare all trades, cancellations, transfers, switches, and reinvestments for the period. I would also check whether the broker is using trade date while TA is using settlement date, or whether a share class code is mapped incorrectly. If the 10,000 units relate to a missubscription, I would verify cash and approvals before processing. The final resolution must be evidenced and agreed with the broker. Be sure to cover comparing trade activity, opening balances, share class mapping, contract notes, cancellations, pending deals, broker files, effective dates, corporate actions, and formal break communication. Question 13. What reconciliation reports or KPIs would you expect a TA team to monitor? I would expect daily reports showing total breaks, value, aging, fund impact, and ownership. Key KPIs include unmatched cash, unit breaks by share class, broker position differences, items over SLA, and repeat root causes. Management should see trends, not just a static list. For example, if one distributor creates recurring late files, that should be addressed operationally. Strong KPI reporting helps prioritize risk and gives auditors evidence that exceptions are controlled. While answering, focus on break count, break value, aging, high-risk items, unresolved broker positions, unmatched cash, SLA compliance, recurring root causes, reviewer sign-off, and trend reporting. Question 14. What would you do if cash is received but no subscription is booked? If cash arrives without a booked subscription, I would treat it as unidentified cash and not issue units automatically. I would review the bank reference, investor records, pending application forms, broker instructions, and any rejected trades. I would also check AML, account opening status, and dealing cutoff rules before accepting the subscription. If the investor cannot be identified quickly, the cash should remain in suspense or be returned according to policy. Investor protection is the priority. Make sure to cover unidentified cash procedures, bank reference review, investor contact, AML and account status checks, dealing cutoff, suspense treatment, no automatic unit issuance, and escalation. Question 15. How would you explain the month-end TA reconciliation sign-off process? Month-end sign-off is the formal confirmation that the TA records are complete, accurate, and reconciled. I would ensure daily cash, unit, and broker reconciliations are completed, material breaks are resolved or explained, and aging is reviewed. Closing units must agree to fund accounting, and cash differences must be supported. Broker confirmations should be chased where applicable. The sign-off pack should include reports, explanations, approvals, and evidence, so auditors and management can rely on it. In your answer, talk about completing daily recs, clearing material breaks, validating cash in units, broker confirmations, management review, fund accounting alignment, evidence packs, and audit support. If you are still with us, congratulations, you are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.